Now, most people don't recall, in 2013, there was something known as quantitative easing. For those of you that don't know what quantitative easing is, that simply means that the prices of items and goods go up, that the prices of products and goods that are sold in the economy actually skyrocket tenfold. Now, this was actually initiated and passed by the Federal Reserve, since they are, after all, in bed with Wall Street. Now, the Federal Reserve, not only are they in bed with Wall Street, but the more expensive the products become, um, the more money Wall Street makes out of this because they make their money based off of what's it called, the struggle of the middle class, and the fact they can't afford a lot of things when the prices of um, products go up. And as we speak, in 2013, we went on to our third round of quantitative easing. Of course, in 2013, it has also been reported that Japan was on its eighth round of quantitative easing. So that comes to show you that our dollar bill is still stronger than many other currencies from other countries around the world. Now, here's another thing that I wanted to point out about the dollar bill. The dollar bill, as a result, also continued to get weaker thanks to the fact that 40 billion copies of currency notes were printed every single month. This was all thanks to the former CEO of the Federal Reserve, known as Ben Bernanke himself, before the woman later on took over as the CEO chairman of the Federal Reserve. And not only does this mean that the dollar bill was getting weaker, but debt was increased more. But of course, during that time, we were under the illusion. Most Americans were foolish enough to believe that the economy was actually getting better. This is actually an illusion of the economy's improvement. You see, that's only because the stock market points went up. If you make more copies of dollar bills and print more copies out of thin air, of course stock market points are going to go up because of the copies of the dollar bill. Now, the only good thing that came out of it was the fact that gold is now more affordable because around 2012, gold was actually up to $1,800 an ounce. Now it went down to $1,300, and I believe it's now around $1,200 a month, an ounce, $1,200 an ounce for gold. And with that being said, this is why it's definitely safe to assume that not only did the price of gold go down, but the price of silver went down. It was actually $40 an ounce. Now silver only costs $12 an ounce as we speak, and it's definitely a lot more affordable. But when the prices of these stock markets go up, this is why it's actually good to stock up on building on build to build up on your investment of fine grade silver. Now, you see, now you see, this is the problem with what's it called, the Federal Reserve. They have technically been the reason for why the debt was so high. Because of the Federal Reserve, this is the reason why inflation continued to go up. And this is really what quantitative easing is. This is really just another fancy word for saying inflation, because the prices of products and items go up. I mean, the price of cotton went up by about what, 75% in 2013? The prices of corn, vegetables, meat, everything went up. Even for stamps. I mean, even shipping packages, that the price of that went up as well. So the fact of the matter is, this is actually the reason why, I mean, this country was in so much debt. Because of the Federal Reserve, I mean, because of the dollar bill getting weaker, inflation went up, and as a result, this is why the prices of gold and silver was actually getting higher and higher and higher. I mean, the price of gold is actually much lower in silver, especially silver. That's because of the stock market points, and apparently that seems to mean that because of the inflation that we've had, Gold doesn't seem to be the standard anymore because usually the price of gold goes up when the value of the dollar bill decreases and gets weaker and weaker. And we were the strongest currency in the world at one point. Now the euro is the strongest currency in the world. And that really comes to show you that we've really fell way, way down from the last time we actually were the superpower as far as our currency is concerned. And this is why we need to go back to the gold standard, because gold is no longer the value that backs up the dollar bill, because dollar bills are just really printed out of thin air. And this is why I've always advocated for the shutdown of the Federal Reserve. And it should be Congress's job to step up and do their job, which is coining money, or should I say making copies of the currency known as the dollar bill. So for all of you guys out there, I highly suggest building up on your investments. Uh, Silver may not be worth that much as of now, as we speak. However, I think it is still safe to say that it's best to start building up on something, because you never know when the prices of these of gold and other precious metals might go up again in full swing. Because it's been going down a lot, then it really went up at one point. Now it's going to go back down, then it's going to go up again. And you'll see soon enough that it's going to start going back up again. Gold is actually a safe bet, and for more than 1,000 years, it has always been used as a backup plan if no one had any money. And gold has always been the number one source of wealth for millennia. And for all these economists telling you to sell your gold because it's not going to be worth much, you're going to be screwed over in the long run if you do that. So, and to make matters worse, with inflation, of course, comes higher interest rates. And with interest rates, it becomes harder to pay back a debt. And that means you have to pay back more money, which is too costly not only for the economy, but this has also been very damaging for the government as well. And with the shutdown that we have of the government, things may be looking grim. But hopefully this should blow over really soon. But as far as the Federal Reserve and the quantitative easing, which is a term most people aren't really familiar with, surprisingly. And to make matters even worse, I mean, not only did they talk about quantitative easing known as QE3, but since Wall Street wants more money out of the middle class, which is, making the middle class suffer, this is how the Wall Street makes their money since they're in bed with the Federal Reserve. I think it's definitely safe to say that at some point I read an article where they even talked about quantitative easing infinity. So this is a telltale sign that the middle class will continue to suffer over and over and over again. But with the Trump administration, we'll see how things are going to turn out. Thank you for watching my video.